Happy Friday, everybody. It is August 16th, and you really cannot say that this August has been boring. Not at all. We had like one of the fastest sell-offs in the markets, especially the big stock markets in the US. The carry trade unwind of the yen, right? And now it is the time to BTFD again, right? Isn't it? Well, just look at the US stock market. This recovery is insane. It's just insane, really. And I want to take a look at that and also just talk a little bit about other opportunities I'm looking at today. It's the end of the week, so usually Fridays also have always, some closing out of positionings, especially later in the day, so I'd be a little bit careful about that. Also, watch options expirations, like, settling of trades usually have some price mechanics. But what we see here is clearly, I just thought that was funny. Look, anyone who bought the dip, that's 4 trillion in market cap in just 9 trading days. That's insane. I mean, just NVIDIA alone added 700 billion in market cap since August 5th. And what I find striking about NVIDIA or this whole AI investment case is that there are no applications just yet that in any shape or form justify the amount of money that's going into. But because the biggest customers of NVIDIA are like, Google, Meta, X, Tesla, I think as well, they all pour money into that company. So, of course, that company is going to continue to make money. And that's why buying the dip in that environment seems logical, especially if that big company pulls up. But even companies like Apple, which, again, will include AI in their next model, as it seems, right? So they can sell your data. But that's a different topic. So that's why Apple also has been going really, really good. So making money with blue chips in the last couple of days was really good. So all the crash profits, one more time, did not get more than a mini crash. Also, a lot of people say but look, the economic data and we're overstretched and blah, 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 blah. Well, definitely we're not getting a emergency rate cut from the Fed anymore. Remember, just a few days, they were calling out, we need emergency rate cut. Now. And we're back to Goldilocks. So nothing about that. So that's why, that's the really funny part, because now what we're seeing is actually that the carry trade is back in action. Just to explain it one more time for those that didn't understand it. The yen carry trade, investors borrow Japanese yen at relatively low interest rates, close to zero, and then they convert that yen to another currency like the US dollar. And then they take that US dollar and they invest it in a higher interest rate, for example, in US treasuries and also US stock market. So that trade works when, if the spot rate at the end of the period is roughly the same. So if the yen and the dollar doesn't move much, that's good. Now, if the yen has fallen in value against the dollar, that gives even more profit. And when you borrow yen and then you sell yen for dollar, then you're actually pushing the currency even more down, right? The only reason so that's good for the investors that are doing the carry trade. They're automatically pushing the price of the currency that they don't want to go up. They're pushing it down by selling it. Now, the only reason the BOJ intervened is because the yen just lost 50% in value in not too much time. And but for now, it seems we're back on track here. And you can even see that the correlation between the stock market and that carry trade is quite striking, at least this whole year. You can see generally, okay, there's obviously, this is very much uncorrelated or actually anti-correlated if you want. But definitely we can see that this move and this move here now clearly correlates. So we're back in a risk-on scenario, even though we don't see that in the crypto. So we saw more of a dip yesterday, but more or less nothing was broken here. We could look at that in a second as well. Carry trade that blew up markets is attracting hedge funds again. Yen shorts have risen around 30 to 40% in the past week, and any hint of BOJ keeping rates on hold may embolden yen sales. Remember, in my last video I explained that the Bank of Japan's capitulation is actually instrumental for that move here. It's because they said, we will, if the market is not stable, we will not do anything negative, basically. And yeah, that's what happened here. So Looking, for example, at Bitcoin, we saw that yesterday here a bit of a dip, but on all things considered, you can see we continue to remain here in that range. My alpha trend indicator is not broken, continue to remain positive here as well. So also remain here on a dip buying territory. Generally, the summer phase is usually like a consolidation phase, and there's a ton of people. I could do a separate video if you want about that. See that this is more or less very much a fractal, or like behaving in the same way like other bull markets, and that we could see like a huge rally towards the end of the year. Speaking of 100,000 or even more in Bitcoin, we will see how that will transpire. Given all these, these are crowded trades. Now, what I find interesting is that the euro in itself has been also like rather holding not too bad. You see, this is euro dollar here, and continues to be quite stable versus the US dollar. Now, dollar yen is crowded because everybody is piling into the dollar, right, for the interest rate of the treasuries by selling the yen. And that move actually, you can see like that has already recovered quite a lot from 142 to 148. That's a lot in FX, by the way, really, really a lot. Now, what I'm looking to do is something else, because also when I look at dollar yen, you can see like the DXM, for example, is not like 54 to 46, like it's like still more half. But if I look, let's have a look at the euro yen here, because that's the trade that I'm looking for. I can open the chart here in the meanwhile. Let's just see euro yen. Actually, I can open up here. Euro yen, there we go. So technically it behaves in the same way as a dollar, but because I think it has like less of a crowded trade, and especially what I like about that trade is that the shorts are a lot more in here, and that's something that I'm really interested to take advantage of, especially if I look at the euro yen on the 4-hour chart. Let's have a look at that. Then to me, this looks like a really nice opportunity to get into it. And I actually shared a trade yesterday. You could see, I don't know if you can see that. I'm like here in the euro yen at the moment. How can we? No, it won't. Anyway, euro yen long I'm in, and still in my Kiwi CAD trade. Those are the trades that I'm running. I share more of these analyses of how and why I entered them, obviously, in my group. And in fact, if we see like a little pull down here, 162.32, that could be actually an interesting entry. That's exactly my entry level that I entered yesterday already. So the price pushed up. Now we see a little bit of a, let's just say correction, and we could be up for a nice leg up here. Something else that I wanted to share with you as well is that I wanted to say thank you for all the nice people that have been sharing positive reviews, that have joined the Hedge Fund Mastery. I mentioned that in my other video the other day, that there's unfortunately a ton of other fake profiles. So this is the only real one, the Hedge Fund Mastery. Thank you guys for joining. I'm glad that there is value for you here, and I will continue to do my best to support you, develop your own trading strategies, become skillful traders, and access capital and make money yourself. And maybe last but not least, let's have a look here at the track record account of mine. You could also see yesterday I did a video about how I actually behave in the drawdown phase. You can see we're up even more now. We're almost here to make back. And those are actually, when I started sharing that track record, I said, like, we are in a drawdown phase. That is historically the best time to start investing into it. Why? Because then you capture the swing up, So if you enter, it's like buying the dip, literally, right? It's like this guy. And that also goes for, look, at the end of the day, time in the market, especially here as well, is better than timing the market. But nonetheless, on drawdowns, there is a higher probability that you catch a next leg up than when you just continue up as well, right? So we're up for the month here, 3.8%. Let's see if we might close this month even more positive than July was negative. I cannot promise anything other than we will continue to run the strategy that I also shared in another video with you, the exact same details, fully transparent, what is going on here, a long-term consistent track record, live account on a regulated platform, fully verified, like I love to say the last time also, something that you don't find too much in the education industry, in the trading education industry. I wonder why. Maybe you can help me out. Let me know. Anyway, guys, I wish you a great Friday. If you like this video, please share, subscribe, help me with the algorithm so I continue to push out these videos for you. I wish you a great weekend ahead, and I'll see you on the next video. Thank you very much.